how do I understand the rules of my joint brokerage account with my spouse?
So there's different ways that you can own assets with your spouse or with other people just in general. And it's going to depend on, whether you're in a community property state or whether you're not. This is something that you really want to, talk about with your tax professional and your estate planning professional. But in general, when you own a brokerage account, and let me back up and explain what a cost basis is. So a cost basis is what you actually paid for the original investment. So let's say that you purchased $10,000 of stock and it grows to $20,000. Well, then you have 100% increase from what you paid for it. And if you go to sell that asset, and assuming it's just in a regular brokerage account, investment account, all of those terms are kind of interchangeable. Non-qualified account, all the same thing. So not an IRA, not a Roth, not a traditional, not a 401k, but in just a regular taxable kind of investment brokerage account. And you sell your investments, well, you could be subject to a capital gains tax. You have to pay a tax on the gain that you have in those assets. So what happens when you die and that money passes to somebody else? Well, under current tax law, you get a step up in cost basis. That means that it steps up to whatever the value is on the day. So if you bought it at 10, it's worth 20, and you inherit it, you get a step up to 20. So if you own it jointly with your spouse, you would get a step up in half of the basis. So, you want to really take a look at how your accounts are titled, because that can really be a determining factor in how it passes to either your spouse or to the next generation.